So I understand that some investors are starting to get increasingly concerned around the idea of air quotes, the Great China Recovery. So many investors are pointing over at China saying that, hey, I thought right after the release of the pandemic lockdown policies, the Chinese people are loaded with money, everybody is not spending for the last 2 years, and where is our so-called revenge spending? Some of the data points that we are going to be going through in this specific video don't seem to attest to that reality. And maybe all these theoretical discussions of how the Chinese people is going to spend money and how there's this going to be a great economic rejuvenation, all these might just be rainbows and unicorns. So I'd just like to take this video to really kind of address those concerns and maybe to shed some light and also my opinion, because ultimately this is my channel. So for those of you who are interested in this sort of content, remember to gently hit the like button and also remember to subscribe on your way out. So I think before we dive into some of these critical data points, I'd just like to provide you with some context. So personally, I'm also in the bullish camp where I believe that the Chinese economy is probably going to explode. Many people are going to start spending a lot of money, and all these are going to flow subsequently into company earnings and ultimately their top and bottom line. So I've made this video I think a month to 2 months ago saying that I think China stocks will explode in 2023. But I think based on some of the data points that was just released, it's essentially going against my prediction and going against what I think will happen in China. So let's look through some of the discussion points. So I think Justin, this is the release just at the start of March. These are Feb data. So in China, February annual CPI is plus 1%. And the estimated is around plus 1.9%, where the previous is plus 2.1%. So monthly CPI, negative 0.5%, annual PPI, negative 1.4%. So for those of you who don't know, CPI stands for Consumer Price Index, PPI stands for Producer Price Index. So I don't think I'll be going through a lot the definitions about what CPI and PPI means. I think inflation, the problem around inflation has been a very hot topic in the finance space. It's exactly the same as how you look at US CPI and the inflation data, the core CPI data, etc., etc. But I think the focus here is when you look at China's figures, it's the difference between the actual reported figure, which is the outside one, compared to the estimated one. You can see that on all three counts, China has quote-unquote beaten the figure. And by beating the figure, it actually came under the estimated figure. So some of you might comment or some of you might tell me, hey, Chiking, I thought coming under is a good thing. Look at the US. Every time it's coming above the expected or above the estimated figure. I mean, yes and no. Specifically, when you compare the two situations, when you compare US versus China, in US, they have an inflationary problem. So that's why they try to bring it down. So they want numbers to come below the estimates. However, in China, just look at the numbers that they're reporting. Annual CPI plus 1%. What's the headline figures that people always talk about when they talk about inflation numbers? Minimally long-term 2% sustainably, right? So it means that actually the figures are not as ideal. And it might even suggest that there might be some sort of deflation. Or I wouldn't say deflation because it's not a negative number. It's deflation for PPI, which is the Producer Price Index. But for CPI, it's basically a softening of the inflation numbers. And by having a softening inflationary number would probably suggest that people are not spending a lot of money. I think just solely based on this February data, it doesn't really support the case that the Chinese people is going to consume like crazy. More importantly, if you scroll down and see, consumer prices in China actually fell in Feb due to lower demand and sufficient supply in the market. So the CPI negative 0.5% month on month, with food prices dropping by 2% and contributing to a 0.38% decrease in the CPI data. So China's CPI increased by 1% year on year, but the growth rate decreased by 1.1% month on month due to the high comparison base of the same period last year. So food prices plus 2.6%, contributing to a 0.48% increase in CPI, but the growth rate decreased by 3.6% month on month. So I think ultimately the tonality of this entire discussion is pretty similar. Everybody is just saying that, the Chinese economy is not going to consume. Many of the policies that they have adopted are probably not going to be effective. And on top of that, you add on the idea that China's government did say on several occasions that they don't intend to stimulate like crazy and just open the money printer and floodgates. It does call for concerns, particularly to Chinese investors, because many of you have vested interest in Chinese companies, and if the consumer confidence is not back, people are not spending money, then Chinese companies are going to be the direct hit of this weak consumer confidence or weak demand. On top of that, China has also recently released their government work report. I think this was at the start or mid of March, where they essentially outlined the set of goals that they intend to seek to achieve in 2023. I think this is pretty normal for most governments out there, but I think specifically for China, many investors and many analysts take reference from that particular meeting because it essentially outlines the agenda and what people can look forward to. So I think the top line number that many people like to talk about right after the meeting is really the idea of a GDP growth target at around 5%. So why it becomes a contentious issue? Let me try to explain. Usually, when the Chinese government puts forth a target, it's essentially a target for all the provinces and all the local governments to look towards too. So usually they'll give a growth target of maybe 3%, 5%, 6%, 8%. So the market didn't really like it, not really because of the number, but really how they worded the number. So in this case, they set the GDP growth target of around 5%. So it's not the issue with the figure 5%, but the issue with the idea or the word around. So what do we really mean by, oh, I have a target of around 5%? It means that I can come above, I can come under. So could I go maybe 4.8%, 4.7%, or 5.2%, 5.3%? Of course, if China were to surprise us on the upside, it's good for all of us because bigger GDP growth, more functioning of economic activity, more money flowing around the economy, and probably instill more confidence. But when you say around 5%, it gives off the kind of the impression that you're not confident of achieving 5%, which is why many people are saying that, oh, China is no longer the growth engine. Maybe they'll come under 5%, and many analysts are actually touting on the side saying that, oh, this might not show enough confidence to investors. So for those of you who are interested, just pause the video, just read through the list of takeaways from the government work report specifically. And just a last part around this idea of instilling confidence, China leaders has also recently said that they're surprised by the pace of economic rebound. And China's economy is recovering faster than top officials had expected, with the COVID outbreak on reopening passing rapidly through the country, suggesting that the government will be restrained in rolling out new stimulus measures this year. So I think just from these first 3 tweets alone, you can probably triangulate and speculate what is the underlying and fundamental position of the Chinese government. Firstly, they do still seem that they're optimistic about the economy because they don't intend to stimulate in any forms, or at least not in the very aggressive way. But at the same time, based on the raw data that is churned out in real time, whether it's CPI, PPI, consumer confidence, etc., it doesn't really seem like it draws a lot of confidence for investors, or specifically to many of these merchants or people living in China. So firstly, I'll just like to point you to this YouTube video. I'll leave a link in the description box down below, but it's essentially telling you why the world shouldn't be extremely optimistic about China's recovery in hopes of this China reopening to save the entire world of this recession. Yes, China is China is a big country, but I don't think they are able to lift the whole world out of these recessionary issues just from their strong recovery and strong demand. So even though the Chinese economy, like the global economy, is starting from a troubling spot, Xi isn't coming to the rescue. True to his long-run plan, authorities aren't going to do any more than manage the decline. And I'll just like to say that there really isn't much to manage, because I think from China's case, many things are kind of state-owned and centrally governed. So unless something's enormous or something huge really broke the system, if not, why would you expect the China government to step in? So to give you an analogy, unless you have a heart attack that requires external interference or intervention, if not, just because your heart rate is increasing, or it does seem like you're having a heart attack, sure, you will be monitored, but you wouldn't be injected any form of medication, or you wouldn't need an operation just because your heartbeat increases. I hope you get what I mean. So in China's case, at least from the government's perspective, they don't really think that the Chinese economy is in a very dire state. So there really isn't much to intervene. So unless that the whole world's economy is crumbling down and demand just falls off a cliff, if not, I don't really see why the Chinese government is going to step in anytime soon. I think to further illustrate the point, Shanghai Macro Strategies has put it quite succinctly. So the most concerning development in Chinese economy today is the entrenched deleveraging among households. So without sufficiently boosting household income and confidence, there is no way that the recovery in property sales and consumption can be strong and sustainable. So given the retreat of the household sector, Beijing has thus far relied on SOEs, which is state-owned enterprises, to expand credit and balance savings. So the problem, however, is that state-directed credit expansion is increasingly inefficient and will inevitably lead to a further rise in debt levels. So the only sector that has a healthy balance sheet right now is the central government. If Beijing really wants to boost growth and confidence, the most plausible way going forward is to have the central government leverage up and increase fiscal support to repair household balance sheets. However, thus far, there is no rhetoric from Beijing hinting such a plan. In fact, the two sessions have made it clear that policymakers have no intention to launch a meaningful stimulus anytime soon. This is one of the key reasons behind the particularly weak investor sentiment. But if our assessment proves correct, a more evident deceleration in economic activities may force Beijing to rethink their overall policy stance. After all, improving social psychological expectation was the core goal set for 2023 at the Central Economic Work Conference, and I am of the exact same viewpoint as him. So essentially, unless something breaks, I don't think the central government is going to step in so easily because they are adopting or they are learning many of the reflection points they've gotten from the rest of the world, where essentially everybody is running the money printer, and the situation that everybody has to, the challenges that everybody has to face now or has to solve now is increasingly challenging. As you see, they try to tighten, they try to do some sort of QE, and then something start to break and they have to kind of meddle and kind of intervene here and there. So this is the whole concern, probably, if I can speculate, what the Chinese government is afraid if they just on the money printer. So another data point that investors look towards to call the bluff on great Chinese economic recovery. China's new export orders in its manufacturing PMI rose sharply in Feb. So I don't think you want to take this bullish growth signal at face value. If there really were a big reopening boom going on, commodity prices wouldn't have been treading waters for the past 3 months. So you can see in China, which is the black line over there, it has been going on a downtrend, and then in February of 2023, you see this big spike up. We have had the bullish China reopening narrative for almost 3 months now, and during that time, global oil prices have done exactly nothing. There is no growth impulse to the global economy coming from China. Nothing. And this is essentially the price chart of the oil prices. Largely speaking, I do understand where many of these concerns are coming from. Saying that many of you shouldn't be too hopeful or too optimistic of China lifting us all out from the global economic recession. And maybe China's growth might also not be something that people should be optimistic or hopeful about. So I think based on the raw data coming out from China in the month of Feb, or even if you were to track back to the last 2 months, because the entire reopening narrative started in December last year, it paints a very lackluster picture. So I'll conclude with this. All I can say is, I don't think consumer confidence is like a tap. You don't on the tap and you don't off the tap. There are many nuances and intricacies in managing expectations, managing confidence, managing consumers. And let's not forget, one thing for sure is the Chinese consumers are loaded and flush with cash. The issue now is they're not spending money. So I think that's a less concern compared to another country or another state where the economy is bad in a very dire consequence and the people and the consumers don't even have money. I think that's a worse state to be in. But back to China's case, this is not really rubbing a lamp. I'm hoping a genie come out and just fulfill you 3 wishes. I think it's not as easy as it sounds. And of course, many of this so-called real-time analysis and real-time data might be lagging in nature. People should kind of have a little bit more patience to see how things play out and don't really bank on things to really have that inflection point. Everybody's trying to look for the inflection point. Whether is it oil prices suddenly shoot through the roof, and even though PMI figures are going up, they're saying that, oh, maybe it's not effective. So I think I'll just end off this video with this very interesting short clip from Jack Ma.
I think you American people worry too much about the China economy. Every time when you start to worry about the China goes better. Every time you think China is in problem, we'll get better. But when you have to say, you have a high expectation of China always a problem. But there's a big difference between American consumption, because people say, well, the economy is bad, so China consumption will be good low. No, totally different. You Americans love to spend tomorrow's money. And the other people's money, maybe. Or maybe the children's money. We Chinese love to save money. We are probably the largest country, the safe deposit in the whole world, because we've been poor for so many years. When we make money, we put in the banks, because someday we know the disaster is coming, so we can spend the money. So when the economy is bad, we still have the money to spend. You guys probably don't. You worry.
So yes, I hope that this provide a very succinct conclusion. Just for those of you who are very worried of, oh, the Chinese economy is going to do this, the Chinese economy is do that, please don't worry for them. I think for those of you who still remember, just a few months back, people are going to say that the whole property collapse and demise is going to destroy the Chinese economy. Where is the destruction? I don't see it. And yes, the Chinese people love to save money because in the event of a crisis, at least they're still kind of protected. And I don't really necessarily think that this is a disaster per se. So let's just allow the Chinese government to do their own thing. So with that, I'll see you in the next video. But more importantly, I'll finally see you on the moon. Goodbye.